Next one for the EFDD, Patrick O'Flynn.
Good afternoon, Mr. Katainen. Nice to see you again. And can I add my voice to those looking forward to seeing the slideshow, although for those slides that describe the current state of affairs in the European economy, maybe a parental guidance certificate will be required. Now, it's difficult to fathom, but it wasn't so long ago that Europe had a lot going for it economically: stable societies, buoyant consumer markets, robust property rights, a skilled workforce. So what's gone wrong? You referred to an investment gap of 300 billion euros. Well, why have investors gone on strike? We know that there's plenty of funds sitting in corporate bank accounts. They just don't want to invest in EU countries, in particular in euro area countries. So will you concede at least that the euro has been a suboptimal feature of our economic landscape in recent years, applying as it does a single internal exchange rate, a collective external exchange rate and a single base rate of interest to so many disparate economies? And can you say a little more about the benchmarks you've set for yourself for us to objectively assess your progress over time? When are they applicable? You refer to medium and long-term job creation, or do you not accept it's been long enough already? And are you factoring in the strain that's being placed on austerity societies with the election result in Greece? Are you factoring in the importance of democratic impulses in constraining what national governments can and indeed should do when it comes to dovetailing with your investment programme? Is there any duration of this record of economic failure which would convince you that the correct policy response would be an orderly dissolution of the euro so national economies can once more have exchange rate and interest rate structures that reflect their underlying strengths and weaknesses? Might not this be the best Katainen catalyst for economic revival?
Thank you very much. The benchmarks, as I said, we are seeking to mobilize private money for viable projects to the real economy in worth 300 billion. Nobody can guarantee the figure because we don't know yet how it will function, but this is our aim. We have been counting that we could reach something like or get something like 1.3 million additional jobs to Europe. But it's very difficult to set any quantitative targets to single market development, for instance, or to project pipelines, which are the most important part of the plan. The risk financing is just one part of it. It's needed, but the biggest change we can get from single market part. And there, well, if we want to measure it for a way or another, then we could look how many reasonable and necessary law bills we can produce, and how many of them have been passed through the Parliament and the Council. The euro, it's difficult to see that euro would be the reason why member states are not competitive enough. And this is the case with many of our member states, and this is also one of the main reasons why investments and the economy is not growing. Also, of course, there are other reasons, but yeah, I don't know. This is an issue in which we can argue, how long ever. But I believe that euro has been stabilizing element, but it cannot replace the national responsibility, which has been lacking in many cases. So the national governments, they are responsible mostly on competitiveness and credibility of fiscal policy, and the EU can only support in the level which is bigger than national responsibility.